Good morning, America. Hubert Johnson here with Taxes Made Easy. We've got an interesting show today. We're going to talk about some fun stuff. You know, it's Friday, right? So we're going to talk about tax evasion and tax fraud today. So, yeah, again, I've been highlighting kind of warning things not to do here, and how to avoid coming under the IRS microscope. And again, nobody, trust me, if anybody recommends some of these things to you, I hate to see it when people make major mistakes and end up under the microscope of the IRS. And it's not that hard. So again, stay tuned. This is going to be a little scary, but at the same time, I'll give you some peace of mind because all kinds of people think they're going to jail if they owe a little bit in taxes. Not true. And even if you owe a lot in taxes, you can avoid going to jail just by doing things the right way. So stay tuned. We'll be right back. Welcome back, everybody. Hubert Johnson here at Taxes Made Easy. Thank you for watching live or on rebroadcast here on a Friday morning. So getting ready for the weekend. There's a lot of news to cover. And then, again, it kind of dives into our topic for the day, tax evasion versus tax fraud, how to avoid both. Okay, so first article is from Washington Examiner. And it just continues to go with our general review of the economy, what's happening in the economy. And this article really focuses on one thing. New numbers from the government about unemployment benefits rose by 22,000 to 231,000 last week. So these are weekly numbers, so it's it varies by week. But these are really seen as a way to judge layoffs. The more people asking for job benefits usually corresponds very closely with people being laid off. So again, it's concerning that this number has gone up, and these are all different signs that the Federal Reserve is looking at to decide if can they actually cut rates, do they need to leave them alone, or if things get worse, they could raise rates. Now, nobody's talking about raising rates right now just because they're fairly high for what we've seen. Again, they're still at 5.5% or 5.25 to 5.5. But it just, again, the labor market is one thing, has been the one fairly solid thing that they're looking at. But again, when you parse it out and look at the details underlying this, again, they still tout the 175,000 jobs created, but that's compared to 350,000 the month before. Most of these jobs are part-time. They're not full-time jobs. And again, the unemployment rate rose from 3.8 to 3.9%. So that is all very concerning. Now, historically, 3.9% is low. But again, before Biden, they changed how they were looking at the jobless rates, jobless numbers. And so these numbers are not comparable historically. So I can be that's a frustrating thing, is that it's hard to compare and look at numbers that we understand because the numbers have been manipulated. Again, Republican, Democrat, they've all done it. So again, like to see better news, but here's something that I think is really interesting. And now this has to do with EVs, but not just EVs. We like to pride ourselves in America, the United States of America, to be aware of how our purchases, using our money, we usually have a lot more money than other countries on average, but trying to use our money for good and not to cause problems in the world. So child labor and slave labor is used throughout the world. Red Lobster got in a huge problem because, they have cheap shrimp is their big thing, cheap seafood. And it turned out that they were sourcing a lot of their shrimp from companies involved in child and slave labor. People chained up, working inside a ship, processing shrimp as slaves. So that was a big thing that hit the news. So here you have one foundation, the National Center for Public Policy Research. So do they have an axe to grind? Absolutely. So this is an organization that their goal is to show what is the true cost of EVs. So they made a proposal at their shareholder meeting asking that a report be compiled on the use of child labor in producing EVs, their EV line. The shareholders said absolutely not and rejected it. So a little bit more about who is this NCPPR? This is a group, again, they put in these fancy names, but really it is a group that is trying to fight against this tide, the political pressure to go just straight EV, and they're trying to highlight, hey, there are real issues with the production of EVs, with the production of rare metals, in this case, cobalt, and it's mainly sourced from the Democratic Republic of Congo. So if you don't know about how mining in Africa works, slave labor, child labor is very, very common. We rely a lot on China for a lot of our rare metals. They're known to use slave labor and child labor and their assets, which they own things across the world. So that's a real problem. And I think it's good to be aware of these. Again, the shareholders overwhelmingly rejected this, but when you're investing and you're purchasing sources, and I don't care if it's EVs, if it's Apple products, Microsoft products, they both have plants in China and are very guilty and have blood on their hands over this. They have, in a lot of their factories, they've installed safety nets because the people there are trying to commit suicide because the working conditions are that horrible. But yet we gobble up all these products from China. So I think being aware, socially aware, not only if you want to, we talk about chickens, cage-free chickens, and I have nothing against that. But when we're exploiting human beings, I think we should be aware of that and our decision making. So, again, Ford claims to provide transparency, but the problem here is that everybody's sourcing it from Congo. More than 70% of the world's cobalt supply comes from the DRC or Congo. So, what do you do here? It's a tough call for Ford, and I kind of get why the shareholders voted the way they did. But this doesn't affect just Ford's EVs; it affects all EVs. So, if 70% is coming from Congo, it's very hard to get around this issue. But again, if we continue to fund and support child labor across the world and slave labor, it's going to continue. It's not going to change until people put their foot down and say, look, these human rights abuses have to end. And as the largest economy in the world, I am for social justice and using our funds wisely, but we have to have corporations and shareholders that are willing to put profit second to some things. Again, and there's so many things out there. The climate, fighting the climate change and everything that can affect profits. But I think child labor and slave labor would be one that we would want to focus on. So this next one, this is from IRS.gov. This isn't a surprise. This is just ho-hum. Interest rates remain the same. The Fed didn't change their rates, so the IRS didn't change their rates. It's 8%, and then 7% for corporations, for overpayments, 8% for underpayments, and that hits corporations at 10%. And then, again, it drops down to 5.5% for payments exceeding $10,000. So again, they change this quarterly. If the Fed does change their numbers, we might finally see the interest rate the IRS is charging go down. But this is, again, last 20 years, this is the highest it's been, but that's because it's been artificially depressed for the last 20 years, and now we're paying the price. This next one, I think, is some good information. Home improvements and getting tax credits for home improvements, especially regarding energy efficiency. So if they're giving you tax credits and you can use them, absolutely use them. So again, talk to your CPA, talk to a tax professional before you just run out and do this. So a lot of people go out and they make improvements without making sure that they qualify. So don't listen to anybody out there advertising, because one of the key things here is this is a credit, but it's a non-refundable credit. So if you owe $10,000 and you have a $5,000 credit, now you're only going to owe $10,000 or $5,000. So it's going to reduce your total bill to the IRS. However, if you're due a refund of $500 and you have a $5,000 credit, they're not going to give you any of it. So you've got a plan to make this work for you. So again, and that was as of January 23. You can get up to a $3,200 credit, and there's various different credits, and it can equal 30% of certain expenses. Exterior, so energy efficient exterior doors, windows, skylights, insulation, air sealing materials, and systems. So not only does it make your home better insulated, makes your gas or your heating and your AC more efficient. It can also protect from critters. There's plenty of reasons why this is a good idea to do. If you do have the funds to do this, heat pumps is a big thing, water heaters, biomass stoves and boilers. I don't know who's using biomass, but it just hasn't really caught on that I'm aware of. But natural gas, propane, oil, water heaters, especially in the Northeast, that is a big thing. Oil furnaces, oil water heaters, and the cost of oil for those purposes has definitely increased. So any kind of efficiency you can find can really help lower your bills. Again, this is where you get $1,200 for energy products. There's a limit on doors, windows, and other home energy credits. So a maximum of $1,200. So you really do have to plan out what you're doing. It's not I can just go do anything and get the $3,200. $2,000 per year for heat pumps, stoves, or boilers. So it depends on. You have to look at what you're doing, and like again, you can get up to $150 for home energy audits. Only 2 doors, 250 per. Maybe you do 2 doors a year, but more than that, you're not going to get credit for that. So don't think you're just going to walk away with $3,200. You has to be very specific about how this is done. And there's other credits available, 30% of new qualified clean energy, electric panels, solar water heaters, wind turbines, geothermal heat pumps, which is rare, but fuel cells, battery storage technology. And so you can claim it every single year from 23 to 33, but it has to qualify. And this is the kicker here. This is a non-refundable credit. So this is going to what I was talking about initially, and where I'm over time. So we're going to come right back to this after the break. Welcome back, everybody. I was diving into the credits here. So, and this is on home improvements, how to help energy taxpayers qualify for home energy projects. I was breaking this down. You've got to be very careful about how this applies. Know the details of this. And again, if you want to go to this site, you can just go to irs.gov, click on news. This came out yesterday, or you can follow the links when this gets posted to our YouTube channel. Now, big thing to know: you have multiple credits here for skylights, for heaters. Again, it's broken down. It's specific: $1,200 for energy projects, $2,000 per year for heat pumps, thermostats, etc. But this is a non-refundable credit, which is when I first started talking about this article, you can't get back more than what is owed in taxes. So it's not going to add any refunds, but it can reduce your tax bill overall. So if you normally overpay and usually get a credit back, this might not help you at all. So again, this is a different credit, residential clean energy credit. Same thing here. It's a non-refundable credit. So talk to your CPA, make sure this is going to help you. And with anything you do with the IRS, good record keeping is very, very key. I can't tell you how many times people have called us and said, look, I installed all those things, but now I can't get credit for it. You have to do it. You have to plan this out to make sure it helps you as much as possible. But if you can do it, I mean, I think this is a good program. And take advantage of this if you can. So next article, I'm going to go through this fairly quickly. This is from the Associated Press. Top Biden aide highlights a coming showdown with GOP over 2017 tax cuts that due to expire. So it's interesting that the Biden administration is trying to highlight this difference, whereas before there wasn't much difference. And this article actually gets it wrong. So the Associated Press isn't as on top of or is choosing what information they share. There's plenty of criticisms of the Associated Press as far as being biased. But again, since we talk about this, we know better. We know what Biden himself has said directly and what his staff has directly talked about. So this is going into the Trump tax cuts from 2017. And so if they all expire in 2025, pretty much the vast majority of U.S. households will see their payments to the IRS increase. But if all of them are cut, or if all the tax cuts are extended, it would cost $4.6 trillion. Now, here's the interesting thing. Again, from the Trump campaign, they say these tax increases would really hurt the U.S. economy. Personally, I think it would hurt the economy. Because is the government going to take that money and use it wisely? Absolutely not. But again, another $4.6 trillion over 10 years is nothing to sneeze at. But that's $460 billion a year on average. Lower in the first part of the decade, and towards the end of the 10 years, it would be higher. But still, that's not chump change. But our problem, again, our revenues have gone up every single year. And they've drastically gone up under the Biden administration. So revenues have increased. So if you increase the taxes by, let's say, $460 billion a year, do you think the government is going to slow down on their spending or just continue to spend as much as they can? We don't have a revenue problem. Our revenue has gone up every single year. It's a spending problem. So until we can get our spending in order, we're going to continue to run multi-trillion-dollar deficits every single year. And that's where the craziness really, that's my 2 cents worth. That's where I think the craziness is really going to hurt people. Now, this is where I think the article gets it wrong. and I don't know when they quoted this, they say the president is honoring his ironclad commitment not to raise taxes on anyone making less than $400,000 and will cut taxes further for workers and families. That is not what Biden declared. He declared that nothing would stay in place, that the entire thing would expire, they would let it expire. So I don't know if they're going off of old information or cherry picking what they're stating. This is old. This is not their current stance coming from the Biden administration. So again, this is why I think understanding the confusion, we get bad information sometimes. And so until I hear something different from the Biden administration, that is an old statement. So when they talk about 4.6 trillion, if they're not dropping the tax cuts for everybody, that number is going to be very different. So they're kind of playing funny games with the numbers. Anyway, but again, this ironclad commitment has already been breached, and he's already stated that he would let the entire thing expire. So trying to keep this updated, it is important to know what the differences are going to be. And so this next topic, I have 2 articles for this next topic, and I think it's important because it deals with free speech. Now, you have a lot of Republicans going after all these tax-exempt groups that are supporting the anti-Israel protests. They are anti-Semitic. They are racist against Jews in Israel. Calling for the genocide of Jews from the river to the sea. Those are all genocidal statements that are beyond the pale. Free speech only extends so far. When you start clamoring for genocide and you use violence, especially when you ever use violence, that's where your free speech ends. Instigating violence is never acceptable. But where is that line? It becomes very, very difficult. So the problem here is, here you have Senate Republicans, it's mainly Republicans, calling for the IRS, and the IRS is controlled by the Biden administration, to review their tax-exempt statuses of all these groups that are supporting financially all the protests. These protests are not, I guess you could say, they're not people just organizing on their own. They were organized by these organizations. They're funded by these organizations, and they're breaking the law. So there's been violence, there's been kidnapping, holding people hostage overnight. Again, a lot of issues with what's happened with these protests. They haven't followed the university rules. And yes, some of them now are paying a very steep price. The question is, here they're suggesting, if these organizations are funding these protests, that most of them have become illegal. They've targeted Jewish students and staff on campus. They've forced universities to cancel school on campus because it's too dangerous, and it's costing a lot of money due to the police presence required, cleaning up. I mean, these are giant messes that are being left behind. Is that something that these, the people paying for this should be held responsible for? I think that's a valid argument, but on the flip side, where is the line? Now, The Intercept isn't a news source that I'm familiar with, but I am sensitive to this argument. So I think the people directly funding these sources could I think they should be held accountable. If you fund and pay for something that becomes a criminal activity and gets out of hand, and you continue to support these, knowing what's happening and the violence that's being advocated for, I think you've crossed the line. And why should you be tax exempt and enjoy those privileges while advocating people and supporting people that are breaking the law? I have a problem with that. But here they're saying media could lose tax exempt status without due process. That is a concern. So The problem is, and both sides are guilty of this. So if you don't think the Biden and Obama administration engaged in censorship of conservative news sites, you haven't been paying attention. On the flip side, it's this idea, and this is the problem when we engage in lawfare against voices that we don't support. That it goes too far the other way, and both sides they adopt the tactics of the other side. And here they're raising they might be crying wolf here, but I do think it's a valid concern that, especially going after media, places that engage in free speech, as long as they're not advocating violence here, I don't care. I mean, people can choose. If you don't like what the left is supporting, you should be able to choose and read garbage from both sides and figure out where the truth is in the middle. Having the government decide what is acceptable news or not, to me, violates the First Amendment, and it's it's thin ice. You start skating on very thin ice when you start doing that. Now the argument is that the government doesn't have to support that from nonprofit news, but I think part of it is the due process part. That's what bothers me, is that there should be due process before yanking tax privileges. Now, if this, and they're claiming that there have been calls for this, I think as we delve into this, if we do start pulling tax exempt statuses, we need to be very careful about that, because we lose free speech on either side. We lose part of what makes this country great. Okay, diving into our main topic for the day, that comes from an article. So this is from a local station, Star Tribune, our local news source. Twin Cities restaurant chain owner charged with dodging $260,000 in taxes. Now I'm going to use this to talk about the main topic because people call in all the time. They're freaking out. I got this huge tax bill, especially if this is the first time they've owned. Am I going to jail? Is IRS going to come seize all my property? Quick answer is, in almost all cases, no. But how do you avoid it? Because it happens. So I'm going to dive into this. And again, these are all allegations, but usually it's pretty serious by the time you get to this case. Now, I deal with cases in the millions of dollars that no mention of tax court, no mention of criminal prosecution. So they say, oh, look, it's $250,000. I'm like, so what? We deal with that all the time. But there are people that owe less than that. One was around $113,000 that was being prosecuted. And the question is, what is the difference here? So key thing is, take this dollar amount out of your head. It's not based on the dollar amount. It's based on the kind of actions that have been undertaken here. So this is what I really want you to focus on as we talk about what can qualify for tax evasion, tax fraud. It's not the dollar amount, it's how the business owner behaved. So again, she's accused, and this is hamburguesas, which in Spanish is just hamburgers. So these are hamburger shops catering to the Latino crowd. They can be really good. I've had them. So, and it's she runs El Gordo outlets, which means the fat one. Again, that's not in Latino culture. Calling someone El Gordo is not a big deal. So she's charged with 5 counts of filing false or fraudulent tax returns, and 1 count of failure to file a return. It's the filing the false or fraudulent returns, essentially lying on your tax returns, that gets someone in trouble, especially when it's $250,000 in taxes. Now, getting into this a little bit more, these are not IRS taxes. I want to be very clear about this. These are not IRS taxes. It is the Minnesota Department of Revenue going after her, because these are sales tax returns. These are sales taxes. So from March of 2018 to November of 2022, they're claiming that she underrepresented the sales conducted and sales tax owed by her business. So why are the states more aggressive about sales taxes? Because this is money you go in, you charge your client, and this is money you actually collect. Now, I have seen instances where they messed up and they weren't collecting the taxes. They didn't realize they needed to. This is usually just a mistake. And you still have to pay the sales taxes, but they're usually a little more understanding when this is based on a mistake. People owe sales taxes all the time, sometimes into the millions of dollars. So when they have someone that owes $260,000, why does it become a criminal case? It's because she underrepresented. This goes over a few years, so maybe 18, 19, 20, 21, 22. That's over 5 years, so that's about $50,000 a year. But when she's intentionally lying about it, that's what the allegations are. It's that she intentionally lied about it. Oh, get out of here. That's the problem here. And that's why they're going after her. So she went through an audit and concluded that her total estimated sales tax obligation was $260,000. So just because you go through an audit, does that mean that you're going to get sent to criminal prosecution? No. It means she probably lied through the audit. She probably didn't cooperate with the audit. So that's where the problem lies, is that she didn't do things right through the entire process. So not only, so that's not the extent of her problems. From December through February, she just didn't file any tax returns, despite doing business as usual and collecting the taxes from customers. So this is money she actually collected from customers as sales tax, hasn't paid them. But really underneath this, she did not work correctly. She probably did not cooperate with the audit. She probably, and she's even admitted that she made a lot of different mistakes in different areas when operating her business. And here's a kicker. This is another key fact. Can't find it exactly right now, but she had 3 prior businesses. So reading between the lines here, when you make some mistakes, one of the worst pieces of advice you can get is to just close a business and reopen another one, especially if it's essentially the same type of business. So the article mentioned that she had 3 different types of businesses. They closed out, and now she has this one. So is she learning from business to business, or she is perpetuating many of the same mistakes? I bet she's perpetuating the same mistakes, and when she runs into trouble, what does she do? She just closes down that business, and I see this all too often. It's one of the worst pieces of advice you can get is to just close down your EIN and open another one. You can do that, but it has to be a different kind of business, and the issues with the first business should be wrapped up and addressed. So sales taxes follow people, especially state sales taxes will follow the owners individually. They will expect you to pay them in full, and when you hide and try to run from the issue, it becomes a real problem. So again, we're coming up on another break here, but we're going to hammer through and kind of walk through the mistakes that were made here and how to avoid those for your own case. Welcome back, everybody. Continue the conversation here. We're going to do some definitions first before we continue, and hopefully this will clarify what we're talking about. So first a couple of definitions are tax evasion versus tax avoidance. Now, it is your legal right, and this has been upheld in Supreme Court cases that it's your legal right to avoid taxes, to pay as little as possible in taxes. And pretty much everybody does it. Why wouldn't you? If you're claiming the standard deduction versus itemizing, you could be avoiding taxes, but you're doing it legally by the rules. Again, like we talked about the energy credits. If you follow the rules and you take advantage of additional credits or programs that are out there, that's tax avoidance, but you're following the rules to do so. So if you actually have a home office and you treat it correctly, there's nothing wrong with claiming it. It is a red flag for an audit, though. So make sure you have your books in order. But there's nothing wrong in claiming it. If you claim space in your home or you're claiming half your home for business purposes or more, that's a problem. And again, you're not following the rules. In most cases, it's going to be scrutinized very closely. So if you think you're following the rules and the IRS comes back and disagrees with you and says, no, this is the difference, and you get assessed the difference. People fight the IRS all the time over tax avoidance. I'm trying to avoid taxes, trying to pay as little as possible, and if you disagree, fine, it'll go one way or another. The problem is your actions taking in disagreement. So if you're being forthright, you're sharing the information, you're not trying to hide the ball, you're not trying to use programs, and there can be disagreement about programs and how they can be applied based on the code, and that's CPAs and tax attorneys that specialize in audits. That's what they do all day long. The super rich, that's what they do, is they hire people to find loopholes and ways to save on taxes, and then the IRS usually gets wise to it or closes those loopholes or does something about that, and it's a game that goes back and forth. But that's as old as time. So as long as you're playing by the rules and by the regulations that are out there, you're fine. But here, again, reading between the lines on this story, not only did she not pay taxes for multiple years, the information was misstated. So this is where it becomes tax evasion, which is a criminal charge. Now, tax evasion comes in when you're not using legal means to try to save money on your taxes. So you're claiming the credits that you don't qualify for. You have no basis to claim them. You're claiming dependents that you don't have. You are under, in this case, she was underreporting how many, what her true sales tax was. So she was collecting money and then lying about the same amount to the tune of about $50,000 a year. And over about 5 years, it's $260,000, but she hasn't paid in the last year, so she just hasn't paid anything in the last year, and now it's getting a lot worse. So just the 1 year of not paying at all, not paying anything, is probably going to add another, I would say probably another $100,000 to the bill. So this is where the state is going to go, hold the phone here. Something's wrong. Now, what's the difference between tax evasion and tax fraud? So tax fraud is when you have falsified information. So you just underreporting is probably just going to be treated as tax evasion. But when you start manipulating numbers and manipulating data and submitting bad information to the IRS on W-2s, on 1099s, etc., that's considered tax fraud, because now it's not just based on the numbers. And the funny thing about the numbers is if you're underreporting, all they have to do is do an audit and they can see it. But if you submit fake numbers and fake documents, this raises it to tax fraud, where you're actually trying to perpetrate a fraud on the IRS. They've seen it all. They've been there, done that. Not a wise idea. But people do it. But tax fraud is a felony. And there are people that go away to prison on a regular basis. Now, this is a state case. Looks like it's just tax evasion, which still a criminal charge, still very hefty penalties. Her businesses will probably be shut down as a result of this, unless she works, well, the door might be closed on her actually working out some kind of deal or payment plan long term to take care of this if she's fallen that far behind. And the problem is, due to the economy, if she doesn't shut down her business correctly, she might have dug herself too big of a hole. So, and this is the warning I want to put out there. And this is why I talk about sometimes the best thing to do is to shut your business down, but to do it in a way that protects you and your family. Businesses come and go. Protecting your financial livelihood long term should be your primary goal here, not just to keep a business open. There are other ways to make money, even though it's really tough. It's a really hard decision to close down a business that you've worked on for years, and you put equity and effort and it's a tough thing to do, to shut down a business. So biggest takeaways here: how do you avoid tax fraud, tax evasion? First of all, you get an ethical attorney or a tax CPA to help you with any audits. Anybody that starts suggesting funny business, let's not report this, let's da-da-da-da. I tell everybody, I will use the IRS rules and regulations against them all day long, but I don't do anything that I won't tell to the IRS directly to their face what we're doing. Why? Because this mile haul license isn't worth you saving a few bucks. And anybody that's willing to do that is going to put you in harm's way just to save a few bucks, and is going to end up burning you. Does that mean we disclose everything? No. But if they ask for this information, absolutely, we're going to disclose it. Or if you don't authorize us to disclose it, I would resign from the case. I'm not going to lie for anybody. Not worth it. Not worth my practice. And it's not worth the problems that you can get into when criminal charges can come. So again, in this case, in Minneapolis, what's alleged is that she not only underreported her taxes, which is lying, a lot of that information was hid. And again, there's a difference between legitimate fighting the IRS and, look, I was in the wrong, my fault, can we negotiate some things here? And if you engage and you make their life easier, you can absolutely often get some breaks, some abatements, even when you're in the wrong. And it all depends on your attitude going into it. Now, if you're in the right, yeah, fight it. But if you're clearly not following the rules and regulations of the IRS and you just fight it just to fight it, you're going to get burned. And it's not worth it. So how do you avoid this? First of all, when you have a problem, call and get expert help. If it stinks a little bit or if it smells fishy, we're not going to report this or that unless they can explain to them why. And I'm very upfront with my clients about how we handle this. Again, there's attorney-client privilege. If you're talking to an attorney, we're not going to go and disclose everything. But at the same time, I'm not going to make dishonest representations to the IRS. I'm not going to do it. If someone's doing that and someone's recommending that you make up expenses, that you make up business expenses that aren't real or personal expenses that aren't real, go get somebody else, because they're only going to hurt you in the long run. Will the IRS find every single case? No, probably not. But is it really worth criminal prosecution? Hands down, I don't care what the dollar amount that you're dealing with. Going to jail is not worth it. Going to prison over this is not worth it. It absolutely destroys your reputation, destroys your business, your ability to run businesses later on, and some pretty hefty things. I've had tax preparers that were barred from ever preparing not only their own tax return, but anybody else's as well. Their business is done. They can never do that again because they filed too many fraudulent returns and were prosecuted for it. So, I mean, that's pretty hefty. Now, I've been able to help people deal with the tax issues on the back end, but the criminal restitution, the criminal penalties usually cannot be wiped out through an offer and compromise. In almost all cases, if you're for fraud, you can't do that. And you have to wait 40 years for tax debt to expire rather than 10. So yeah, that it's going to be around for a really long time, and it's a huge burden that you never want. So best ways to avoid tax fraud is to tackle the issues head on. Deal with them early. But if things have gotten bad, I've stepped into cases that were all kinds of messed up. Many times where they got horrible advice from other people and their cases got much worse. And there's times I'm able to turn around. There's times I say, look, you have to file for bankruptcy. There's no way. And you can't. Well, you can discharge most tax debt in bankruptcy if it's old enough. Tax fraud is a different beast. So you might not be able to just discharge that in bankruptcy because it's based on criminal charges. So again, talk to a bankruptcy attorney, but you never ever want to go to have criminal charges filed against you. The IRS is very careful because their prosecutors want to keep really high conviction rates. So usually and that's for the IRS, I'm sure the states are very similar, when they do charge, they want a pretty solid case. Not saying someone's guilty. They do have people that the charges are dropped or they work something out. But again, by the time it gets to a criminal conviction, or a criminal case, they usually have pretty solid evidence against somebody. So what I want to emphasize, if you don't have good record keeping, if you haven't been fully disclosing everything to the IRS, get straight with them. Start complying, and they'll give you peace of mind. You'll be able to get your business on track. And honestly, it's so much easier to handle your personal finances and your businesses when you don't have to worry about the IRS coming and prosecuting you or the state. So closing down a business that needs to be closed down, or if you are an individual and you've been working and you just can't stay on top of your taxes, you need to make some adjustments. We can help you make adjustments in ways that will save you money with the IRS, but at the same time help you in improving your financial situation. And really that's our goal, is to help deal with the tax issues while putting people in a better position long term. And some of that is changing your habits, talking to financial advisors, coaches, and a good CPA that will make sure that you're not going to continue to owe, that you avoid the penalties and interest going forward. And there's so many ways to save money. And more importantly, and I have talked about this plenty of times, give you peace of mind. Again, just the other day, talked to someone who was so stressed out about this. They said that they had considered ending it all. I said, don't do that. We can find that peace of mind for you. It's never worth it. So true story, years ago, someone had a plane and they were so tired of fighting state and IRS taxes that they took their small plane and flew it into an IRS building. So first of all, those aren't the people making the decisions, but he was so frustrated that he wanted to do something extreme, and he was to the point of committing suicide. You could almost always, in most cases, you can solve it by dealing with the IRS. And the scary part is that I actually talked to people that were in that building. I might joke around sometimes that I hate the IRS. They have a valid function in society, and most of the people working there they're just normal people. It's just some of the changes that I hate, where they actually hurt real people real time. And I think the higher ups, that's a whole nother topic, but how they're hurting the poor. But if you're mad, you're frustrated, and you don't know how to deal with the IRS, you don't know how to find that peace of mind, give us a call, 520-485-7371. If you don't owe $10,000 or more, sometimes it doesn't make sense to hire us, or even if you just can't afford our services, we give free advice all the time as a public service. So there's no reason not, and we're not going to put you in a high pressure sales situation. That's why we do this show. This is purely educational to inform people on how to deal with these issues and live a healthier, more wholesome life. A life of, there's a phrase among financial coaches, to live an abundant life. So if you have those questions, give us a call, 520-485-7371, and or reach out to us through guardiantaxlaw.com or on our YouTube or Facebook channels. And I hope everybody has a happy, wonderful Mother's Day weekend. And go spend some time with your mother, relax, and enjoy your family. Don't worry about taxes this weekend. Call us on Monday. And again, have a great weekend, and we'll see you all next week.